From the breathtaking fjords and majestic mountains to the wealth-generating treasures of fish, oil, and gas, Norway has carved its name as a nation of boundless natural and financial abundance. The mastery of harnessing these resources has catapulted the country into the echelons of global affluence. Our path now leads us to the pulsating heart of the financial world, the forex market. A realm of perpetual motion where currencies never rest and valuations mirror the consensus of all participants. Today, our focus sharpens on Norway's currency, the Norwegian Krone, a dominant force among the world's top 15 most traded currencies. But how well do we truly understand its intricate dynamics? Get ready as we delve deep into the folds of Norway's currency, unraveling its mysteries, and illuminating its future potential. If you're an investor with an eye for opportunity, understanding the krone's strengths and vulnerabilities could prove to be a game-changing advantage. Stay tuned for a journey that could reshape your investment perspective. It might come as a surprise, but Norway, unlike many of its European counterparts, has not embraced the euro as its currency of choice. In a continent where the euro solidified its position as the official currency for 19 of the 27 EU member states since its inception in 2002, Norway charted a different path by retaining its distinctive currency, the Norwegian Krone. This divergence can be attributed to Norway's unique status as a non-EU member, aligning itself through the European Economic Area (EEA) affiliation. This arrangement empowers Norway to safeguard its independent monetary policies. The dynamics of the Norwegian krone dance in tandem with economic trends that hold the potential to sway its valuation. Furthermore, a well-known truth in the investment world is the profound impact of global crude oil prices on the krone's valuation. With Norway reigning as Western Europe's principal oil exporter, any fluctuations in oil prices reverberate through the core of the Norwegian krone's worth. Aside from its oil industry, Norway's GDP is driven by a variety of sectors, including shipping, hydroelectric power, fishing, and manufacturing. It's worth noting that many of these industries are state-owned. Despite this, Norway has one of Europe's most stable economies, which in the past has made the krone a historically prudent investment. This stability is also reflected in Norway's overall wealth and high standard of living, with a slow population growth rate of 0.5% annually. Zooming in on the latest economic data, the Norwegian economy's high income stature manifested in a commendable GDP growth of 3.9% during 2021 and a further 3.3% in 2022, with an inflation deflator registering at 16.9% for 2021. As an investor, it's important to understand the economic conditions and cost of living in Norway, including the value of the Norwegian krone. One way to gauge this value is through the Economist's Big Mac Index, which compares the cost of a Big Mac burger in different countries. As of June 2022, the average cost of a Big Mac in Norway was 62 krone, or approximately $5.15 US, making it the second most expensive in the world, just behind Switzerland. To provide further context, the average monthly salary in Norway is 50,800 Norwegian krone according to Statistics Norway, which converts to approximately $5,178. However, it's important to note that a significant portion of this salary is subject to income taxes, which are used to fund the country's robust healthcare and welfare programs. Understanding the value of the Norwegian krone and the country's economic conditions can provide insight for investors seeking to invest in Norway or partner with Norwegian companies. In this video, we'll explore the factors that impact the value of the krone and how it fits into Norway's overall economy. First off, let's start with the question: is the US dollar stronger than the Norwegian krone? The US dollar is and have always been stronger than the Norwegian krone and has steadily strengthened against it since 2015. This is likely due to changes in the respective interest rates between the two countries, fluctuations in the price of oil, and the weakening of the Eurozone economy. Casting our gaze over to the 2010 to 2021 timeline, a robust GDP growth of around 28% characterized the USA, juxtaposed with the Eurozone's 14% and Norway's commendable 19% growth rate. As of the last months, the value of the dollar, relative to the krone, has ranged between 9.75 and 11.09 krone for each dollar. You may ask why the fluctuation is that high. Well, as we step into the year 2023, we find ourselves amidst unceasing interest rate hikes and the constant oscillations of oil prices, a phenomenon that seems to take no rest. Reasons for recent decline in the value of krone. Norges Bank, on behalf of the Ministry of Finance, carries out the necessary foreign exchange transactions associated with petroleum revenue spending, via the central government budget. Every year the government uses revenues from petroleum activities to finance a planned central government budget deficit, referred to as the non-oil budget deficit. This means that the central government budget is set up with a deficit, with oil revenues excluded, and all government revenues from the petroleum sector are then transferred for accounting purposes to the Government Pension Fund Global, GPFG. Subsequently, the deficit is financed by reversing funds from the GPFG. Petroleum revenue spending is governed by a fiscal rule, according to which over time, oil revenue spending shall equal the expected real return on the GPFG, which is estimated at 3%. Current revenues from petroleum activities are generally referred to as the government's net cash flow. The government receives revenues in krone from oil taxes and dividends from oil companies such as Equinor, and foreign currency revenues from the government's own petroleum activities. Since the capital in the GPFG is exclusively invested in instruments in foreign currency, the return on the GPFG is also in foreign currency. This means that the krone received from these sources needs to be sold, to be able to reinvest the revenue into the GPFG. From the end of 2014 and up until 2021, the oil price has been significantly low, which has resulted in a non-oil budget deficit exceeding the revenues from the petroleum activities. In more recent days, the tides have shifted dramatically. The oil price surged significantly, even surpassing the $120 mark in 2022, an astonishing six-fold increase compared to the early days of 2021. This has resulted in excessively high petroleum taxes received from the big Norwegian oil companies, which then again has emerged the need of selling the Norwegian Krone, to be able to reinvest the cash back into the government pension fund. Another contributing factor to the krone's decline lies in the relatively lower interest rates compared to other currencies. This discrepancy translates to the allure of higher interest returns in alternative currencies, prompting investors to seek alternatives to the krone. Interestingly, the ECB, European Central Bank, has an interest aim of 4%. The FED, in USA, is expected to enhance interest rates to 5.5%. However, the forex market price in several cuts for the Fed rate, which is around 4.20%. These anticipated targets stem from market expectations, reflected in the pricing obligations. In parallel, Norway's interest rate is projected to ascend to 3.851% by the end of 2023. Krone sales from the Norwegian bank is however expected to be reduced after the summer of 2023. The reason is that the current krone sales are dependent upon the petroleum tax revenue for 2022, which is paid from August 2022 to June 2023. The tax revenue for 2023 stands to be lower than the one from 2022, which points to lower krone sales after the summer. A diminished pace of krone sales by Norges Bank hints at a relatively stronger krone in isolation. Notably, instances have arisen where a noteworthy disparity existed between krone purchases by petroleum companies and Norges Bank's krone sales. As exemplified by the chart, these flows eventually neutralize one another over time, yet, in the short term, substantial mismatches fuel heightened fluctuations in krone pricing. Is the Norwegian krone a safe haven? Although it is occasionally affected by domestic troubles, the Norwegian economy is relatively stable, and the currency is unlikely to see any sharp changes in value. Most of this understanding is due to the natural resources like oil and gas that contribute to Norway's prosperity, which helps to protect its currency from general financial instability. Yet, from big exposure to narrow segments, comes little diversification. No one knows about the future and how the world transitions from oil and gas. Analysts argue intensely on which factors that has contributed to this, yet, the same factors all analysts name, is the interest rate, NOK selling and the current instability of the government economic decisions, such as the salmon taxing. Is the Norwegian krone a good investment? Although the Norwegian krone, NOK, is generally considered a reliable currency, it falls to each individual investor to decide whether it is worth investing in. As it stands now, short term, the Norwegian krone is mostly considered as a bet on the oil markets performing well. However, with the top-notch technologies and the greener energy focus in the country, the NOK may be of interest long-term as well, if the country succeeds and becomes the top leaders within green energy and new technology. Overall, Norway's strong economic performance and stable outlook make the Norwegian krone an interesting currency to keep an eye on. Thank you for watching our dive into the Norwegian currency. Please consider subscribing to our channel for more insights into global economic trends. Please consider subscribing to our channel for more insights into global economic trends. Until next time, stay informed and stay safe. Goodbye.